From the opinion pages of the Wall Street Journal, this is Potomac Watch.
The economy and the election. How big an issue will it be for voters in 2 weeks, and which party is it helping as we get to the final days? The third quarter GDP report came out on Thursday, showing 2.6% growth in the quarter after almost no growth for the first 6 months of the year. And the White House naturally touting the result as the beginning of a new and robust growth spurt. And the president says Republicans will crash the economy if they happen to win control of Congress. What do Republicans want to do, actually, if they do take control of Congress? Welcome. I'm Paul Gigot here with Joe Sternberg and Kim Strassel. Welcome to you both. Let's talk a little bit first about the actual facts of the report on economic growth for the third quarter. White House saying it's terrific. But Joe, looking at the numbers, how do you read it?
The problem that you've got is that, yes, the GDP growth is better this quarter than it's been for the past couple quarters, but it's growing in the wrong way. So if you wanted signs that the economy was in a healthy condition in the way that households were feeling, you would generally expect to see pretty strong consumer spending, but that line is very weak here. And then you've also got, I believe, an outright contraction in investment, which is definitely a very bad sign because that investment is always the thing that happens in this quarterly GDP that paves the way for growth in the future. So instead, what we've got is growth that is coming from really unusual and kind of hard to explain burst in net exports, and then also government spending. And the export portion of this might not be very sustainable over the longer term if the rest of the world is falling into economic difficulties. And the government spending, let's just put it politely, does not have a very good track record of creating the conditions for productive economic growth in the future.
Yeah, just to put a couple of numbers on your point about domestic private investment, it's now fallen for 2 quarters in a row, and not by a little. 8.5% in the third quarter decline and 14.1% in the second quarter. So what you're seeing there, I think, is just uncertainty on business. They're just pulling back on their investment because they're not sure what's going to happen with the economy. They're not sure what demand is going to be like, given the fact that the Fed is raising rates so much. Will there be a recession? They don't know. Also, price increases are introducing more volatility and uncertainty. And then you have the new burden of costs that are somewhat uncertain because you don't know just how far the Biden administration is going to go with its regulatory assault. Kim, I want to ask you, Joe Biden wasted no time today issuing a statement on third quarter GDP report saying doomsayers have been arguing that the U.S. economy is in recession and congressional Republicans have been rooting for a downturn. But today we got further evidence that our economic recovery is continuing to power forward. And he went on to boast about the results. I guess, this would be totally expected, the president crowing. What do you make of this? And is the GDP report that came out, this is likely to be enough to assuage the concerns of the public that they've been registering in nearly every poll about the economy?
Well, of course he was going to say that. We're 2 weeks away from an election and people are hurting. I don't think that it's actually going to change anyone's minds because if you look out here, and one of the reasons why these numbers are a little disturbing, you mentioned business investment, but also consumer spending was down. It rose 0.4% in the third quarter, down from a 0.5% increase in the quarter before. But spending on goods actually fell, and spending on services was still up, but it had slowed. And what we're seeing is that consumers, because of the high cost of inflation, credit card borrowing is up, savings are down, costs are rising faster than paychecks are. So this is a potential fleeting moment. That's why a lot of economists are looking at this saying that this is actually disturbing news. And those are the things that voters feel. They're looking at their bank balances decrease. They're looking at prices go up. They're seeing their paychecks not cover things. So the president can say what he wants to, but it's not what people are feeling when they go to gas up their car or go to the grocery store. So I doubt that this will really make much of an influence in terms of the voting electorate, his statement. And he could come to regret this too, because if he talks this up and in fact the economy is headed the way these numbers seem to signal, he's just going to end up having to do some explaining down the road.
Yeah, the inflation in all the polls, Joe, is the major concern that Americans have, and with good reason. Prices in food up 13% in the last year. Also, gas prices, they've come down from the peaks, but they're still very high, a little more than $1 a gallon than when Joe Biden took office. Stock prices down, their 401ks, when people look at them, they go, ooh, that's painful, if they have the courage to look at them. I know human nature is such that when they're going down, you tend to say, I think I'll look at something else today. And the biggest thing is, I think, real incomes. That's incomes after inflation. Even if you get a raise, is it really a raise because inflation is chipping away at the value of that raise? And those have declined since Joe Biden took office on average. And that really weighs on consumers. I think it's weighing on consumer psychology. And I think it's one of the reasons that consumer spending has started to slow, even though it was booming for a while there coming out of the pandemic. Now, as Kim suggested, it's pretty tepid growth. And if you look at the real disposable income, it's only up a little in the last quarter after just basically about what it had declined the quarter before. So that's not growing. That's not a good sign. The best sign, I suppose, going forward for the economy is that unemployment still seems low, still is low. 3.5%. So that is good news, and that'll continue to make sure that consumers are earning enough money to spend. Of course, the question is, are they going to be confident enough to spend it?
Exactly. I mean, and I completely agree with Kim's point that, I mean, after a certain point politically, you reach the stage where people don't care about the numbers that they're reading in a government GDP report anymore. They care about what is right in front of their noses. What is their daily experience of the economy? You know, I want to come back to this issue that, I mean, one of the biggest problems here is the declining investment, because that is so important as the engine of future economic growth. And I think that that leads to part of the political problem here, which is that what people really want to know about the economy is, what do they have to do to get ahead, to achieve some kind of economic security for themselves and their families. And right now, it's becoming harder and harder, I think, for people to understand what that pathway is. So you can have a GDP number that gives the Biden administration an opportunity to crow a little bit about how it's gone up after it was contracting for the first 2 quarters of the year. But then you look at something like that investment, which hints at, you know, an economy that is going to struggle to grow in the future, that is going to struggle to create prosperity for people in the quarters to come. You look at this evidence of distress in households when you look at the personal consumption lines of the GDP report, and the real human story that tells you is of households of voters who don't understand how the economy is working for them and kind of think that the economy is not working for them right now. And I think that's going to become a very important political factor over the next couple of weeks.
This week, Kim, another milestone was passed economically. Mortgage rates, average mortgage interest rates exceeding 7% for the first time in, I think, more than 20 years since the great disinflation of the 80s and the 90s. And that means that the price of home ownership is going up, and it's going to price a lot of people, particularly young people who still have relatively lower incomes, to be able to afford a home. Now, I'm not saying there's going to be a housing crash here, but it does affect affordability. And again, that also affects consumer psychology. The other thing I would point out is in terms of the attribution of who's to blame for the inflation that we're seeing and thus the higher interest rates to counter it, the central debate is, what responsibility does the Biden administration policies have and congressional Democratic policies have for triggering this? Republicans have been saying, look, this is all about excessive spending that triggered excessive demand, and then the Federal Reserve accommodating that. Biden, of course, has been saying, blame Putin, blame the rest of the world. It's a global inflation. And that debate is central to who's going to take the political responsibility for this. And so far, I think the Republicans seem to have been the better at persuading voters of that, not because of their own persuasive skills, but more than anything, just that this is all happening on Joe Biden's watch.
Yeah, just to put some numbers onto your point too about home sales, new home sales fell nearly 11% in September, and home sales overall have now posted their longest streak of declines in 15 years. And that is something that, as you mentioned, deeply affects people, their ability to move. They can't go anywhere else. As you said, first time couples can't buy a new home, and that really lends itself to a sense of economic discontent out there as well too. Republicans are successfully managing to tag this White House for this, mostly because I really do believe that average Americans understand somewhere the notion that excessive deficit spending does play a role in inflation. They have watched this Congress propose and then just spend extreme amounts of money. And Republicans have been making that case. Now, the White House, for its part, has been trying to sort of subtly and sometimes not subtly point the finger at the Federal Reserve. And obviously, the Federal Reserve bears some responsibility here, too, for waiting too long to rein in the money supply and undo the very easy money policies that went on for far too long. But the problem there politically is that people don't tend to point to the Federal Reserve, and they can't get angry at the Federal Reserve in the same way they can at the ballot box for the people who are in charge, and that are Democrats in the White House right now. So I think all of this lends itself to the notion that this trajectory that we've seen over the last couple of weeks of Republicans gaining in the polls is likely going to continue to Election Day. This number is a headline number, but it doesn't really affect the facts.